Okay, all you devils, how's it going? All right, so here we are, 12:20 Monday. Happy Monday. So I thought we'd break out an old favorite and we'd just poll the members here, see what you guys are interested in looking at today, and then queue up here the winners. Gold in the lead here. It doesn't surprise me here. It's a bit tricky. I've got a daily chart here. Now I'm looking at the spot here at XAU to USD. So for those of you interested in trading this, wouldn't require you to post the margin for gold futures. So you can trade minis, micros here, and increments of such with your FX broker. But right, I mean, if you're trading the futures, have at it. But just I wanted to give more members more options here. So now we've been through this a couple of times here. This whole section here seems to be the key to getting the count right. Now we've been back and forth on this a couple of times because it's unclear. You got a few mixed signals here. Now the last time we looked at this, we had considered this potentially corrective. Right, and as always is the case with Elliott, right? So you keep working backwards. So if this was going to be an impulse, well, we had to consider this possibly an ABC, which would have required this to go A. And last time we counted it, we went WXY, and we're heading towards the C. Well, now as we've now come up here and broken through this little ridge of resistance we have here, now this nice fat round number up here. Well, the all-time high and then the round number of 2,000 are going to be irresistible to the market. So I think this is very much in play. It looks like they're going to get there fairly soon. Now, this count, though, is extremely bullish. So if ends up we have it correctly identified here, we're talking about the 3 going in here of, right, so pushing, so the implication being much higher, well over 2,000 here. So if this is indeed, if it's going to play, Jesus, never the first click, 1, 2, right, and we're going up for 3, well, then we'd be looking for 4 and push up to, but that's 5 of 3, right, as would relate to this pivot here. So, I mean, geez, I think I have to go to a 3-day to get all that in. Now, on O and A, they don't go back, right? Obviously, we have more history than that, so I can only go to 06 here. But even with, I can't remember the exchange that would give you more data, but this is very, well, this is let's define it, right? So this is an internal retracement, right? Whether it's the 50 or the 618, depends on where you're starting your pull here, but it's an internal retracement. So we can wedge a WXY into it. So it looks like you'd have to work this. You've got a, because you've got a 3 followed by a 3. You're not far enough for a flat. So you'd have to go WXY, and you're kind of stuck with the A, the very shallow B, but then you got to finish this with this diagonal. So you've got your candidate for a 2. Now, if that's going to hold, let me zoom back in here. Let's go to a 12-hour here. I think this shows up pretty well. Come here. Nope, let's go back to daily. Okay, so this, well, certainly you've got a clear 3 here, so the ABC. Now, the question is, you get kind of a sloppy 1. You got to wedge it out in a diagonal of sorts. It could be here, could be here. I don't know that it matters. So you could have a slightly expanded B wave here. Again, I don't know that it matters, because per this count, whether one's here or here, we're within ticks, and it doesn't really matter based on what's followed. Now, one of the things that and again, we've looked at this a number of times over the last year, we know this is a golden corner. So if I grab my absolute low here, right, so we get just a textbook golden corner pocket. Again, we've looked at it before. So again, note, right, as I like to point out, it's not the 618, 65 to the tick. So we go from that golden corner, right there, here's your straight line. Oh, damn near, we got one little pullback. So there's your 80%, right, being realized, right? Best odds in trading, right? There it is yet again. So now interestingly, we retrace and we hold here at this structure, just coincidentally happens to be the first algo target. So you can see if it was on its way, the algos, they got their little reaction here, but it goes third target. But here was, I promise you, there's another algorithm here that's got that as its target. This looks like it's too shallow, if I recall. We don't quite get to the 50, but we do get to the negative 100. So that thus you get your candidate for a 1, 2, 3, little ABC for the 4. Now, of course, with the COVID crazy, let me hide this. Let's take that off. Excuse me, guys. So with that, well, so now I am gonna go down to the 12 here, because this gets a little funky. What do you do with that, right? It's just a free fall and then a recovery. Now that is at 12 hours. So it is actually, again, you got to kind of work backwards. So if we're gonna, now we are relabeling this as to how we looked at it last time. So if it's gonna go 1, 2, 1 A, B, C for the secondary 2, well, then we gotta start working forward. Now we can get a clear impulse. So it's, I'm sure you guys members have all done this. 1, 2, 3, 4, not lovely looking 4, and we go. Now it looks like we get our 5 right here. So we've got to work through this free fall. So your first thought, upon looking at the depth of that, is to think, oh well, considering how far that's gone, that's more probable to be a wave 2. Well, that 2 is a misnomer there, because it's part of the higher count. Let me drop that down so it won't distract. So it looks like that's got to go into what's followed here. So you can see the nice little structure here. You get the nice little divot in the volume profile here, because we have no market acceptance here. So we reject it, so it creates the divot. 1, 2, 3, right? You're kind of stuck with this. 3, 4, 5. So I complete something here, and the reaction that follows. Now you go, well, this is just coincidental. Just to let you draw your own conclusions there. You know what I would tell you. There are no coincidences. So 1, 2, 3, 4. So we're not threatening the 1. Now it's deep for a 4, but if I just pull it out, I'd be pulling from this as the 2 through this is the 3. Well, is the structure front run on the 50? Could be, right? We're never going to really know. But look, we come up to it, right? So is that's a bigger front run than you realize. I'm on a 12-hour chart, so that's, what's the spread there? Certainly it could be a front run. So we're at that's 1451, and the 50 is at 1432. I guess at this scale, it's $20, but that. So something, right? So whether it's the structure here, because this is not relative to any overlap per an Elliott count. So I think you just have to live with this as the 4, since we're not. It's not unreasonable to have a 4 go to a 50. Deeper than you think, but given the circumstance and just the immediate V bounce off of that, as we keep going higher, well, you're forced to say, well, okay, something didn't end there. Well, I suppose this could be, right. If we're going to 3,000, this could be a 1, 2. So that we can't eliminate that possibility. But based on what we can see right now, it would appear that we've got to plant a 4 here, and now we're going up for the 5. But again, as I remind you, that's 5 of the 3. We're still seeking the 3 relative to the 1 that was our previous all-time high here at 1920. So it looks like we're going well beyond that, right? Just laying out the Elliott count. Whether even if we get this wrong a little bit, right? If we end up coming back here based on more strength here, and we've got to relabel this. Either way, right? All the alternate counts here still imply higher prices here. So as we just are rolling along here, and again having gotten through this little ridge, this looks just that'll be a magnet, right? Because they know there are stops up there, right? So are we going to go pop it and then pull back, right? That wouldn't surprise me at all. So you can see potentially. Well, so what you might do is just start using your fib tools, right? Where's a reasonable target for this? Well, of course, so we can just right off the bat, we can say, okay, potentially resistance zone here. So it seems like it wouldn't be the case, right? So you're worried about sellers defending up here that sold in 2011, right? I promise you there are institutions, large players, right, that are still short, right? Because they trade this on an entirely different time frame than you or I do. So us looking at this, there will be defense of those shorts. So that's how you can often end up with, even though it's 9 years later, you can find you might anticipate a reaction there, because I promise you there will be stops there, right? So if it pushes through, now if it's news driven, we got something to kick it. The volume's there, we certainly could blow through it, but more typical would be, because that's such a major top, right, that you might get a little reaction, get a little pullback, and then if we're going to keep going. So then if you're projecting for this, let's see, if we're pulling as the 1, 2 here, well, are we getting beyond any reasonable expectation? Well, so then now you got your 2, 6, 1, 8. which would be, it's not that we couldn't go beyond that, but that would be certainly an extreme for a third. So 1, 2 going up for that 3. Well, if we dial in the median lines off of the original 1, 2, you know, of course, we could be going much higher. So we've gotten well outside of it here. So that's why I pull from here, and then it being a golden corner. But even there, if I pull it this way, right, as we did it earlier, well, you know, you're getting, well, I've got that's the 150, the 175. So I put the 125 on in there. Well, let's do it. If I put the 125 in there, let's get it here. What have I got? Let's go to the 1.25 on that. Okay, all right, so now we got a nice little target here, right there, for this. If this is going to continue to roll here, right, and we're going to go up and we're going to challenge that. Well, now you can kind of see how, okay, I can see how, Jesus, trading views sometimes just so frustrating to work with. Okay, so let's come back here. So if we're going to go up here, and we're going to get through that little pop here, you could see how you might, from that, if we're going to carry on, get that little pop of stop running here, right? So those will be buy orders, so they'll have to buy them back, and that could be your little pop to push it up here, sets up. You can say, just kind of thinking through how that might play. So I would certainly put an alert up here, right? I mean, why not, right? Well, if we're going to pop that, let's know about it. And if you're long and in, well, you got to be cautious. Any major top, you have to be cautious, right? There's likely to be volatility. There is breakout traders, and you know, from 9 years ago, and all the stops that are sitting there that could be 9 years old. They certainly could be. There's likely to be some volatility here. And again, I'm not suggesting that it's not, one scenario here isn't that we just roll right through it. But you always want to be careful approaching any top, whether it's intermediate, short term, on a 1 minute. Anytime there's a pivot, right, you know there's potentially volatility there, right? So the breakout traders are waiting to bait you. Stops are sitting there. You don't know if it's going to pop and roll or you're going to run. So it's not a great place to enter the market ever at a pivot. Right, you want to let the pivot shape and then get as you move away from it. But entering, you know, this is something that I just, you know, I've learned this the hard way. I never, ever, ever buy that. Ever. And again, why do I never do that? Because I've tried it so many times and lost so much money doing it. It's now just part of my, I don't even have to write it down. I just instinctively, I just don't do it anymore. I just do not buy major pivots, right? And when I say that, it's not that I'm not interested in getting long there. I'm just not buying at the break of the pivot. That's not the place to enter the market. We were talking about this last week, right? You always want to try and enter on a retracement so that you're long going into it. So if you do get that reaction there, that's, well, in this case, that would be bearish, right? If you get a little pop stop and then they drive it down, that you don't get caught into that. At least you've got some house money as you go into it. Because if you're going into it long, well, you're anticipating that the stops there are going to give it a little kick. Right? Now, maybe it takes us to this 2618. Maybe it's just a little kick and a pop, but at least you're playing with house money there. It's not a good idea to enter the market at major pivots, right? You can take my word for it, right? Which is really the point of me guiding you through here, or you can learn the hard way, as I did, because people told me not to do it, right? But I'm a stubborn son of a bitch, and I just go, well, you're gonna bullshit. I'm gonna try it. I know there's stops there that can be the fuel, right? And again, years of doing it, I don't do it anymore. Take my word for it. Learn yourself. Either one, eventually, you'll come to the same conclusion. I'd be surprised if you didn't. Okay, that said, okay, so now let's get this off here, knowing that we've got that little target up there. Let's get you off of that. All right, so let's go down to something where we can actually look at trading it. So I think at 2 hours I need, so we can see it. Now this gets a little dicey in this last leg here, because there's just a lack of clarity as to what we've got. So this is a bit of a problem spot right here. So if you're coming down, so if you look at it, well, this is clearly a 5, right? So I had considered the possibility here that we had done an expanded B, right? So that would play better, but you can't. Well, I suppose you can. You could probably wedge. Yeah, it looks like you could. You could probably wedge an A, a B, and a C, but it's really you're force fitting. It's really just a hideous force fit. Well, so you'd have to do it this way. You'd have to go, okay, there's the A. I'm going to have this B with no definition in it, and then I'm going to have a tiny little C. okay, maybe. But it's not much better coming down, because if you open this up, you're kind of stuck with, all right, well, this is clearly a 3. All right, what do we do with that? Right. So it's hard to have any conviction because it's sloppy. Right. So you don't want to lean too hard on the Elliott count here because it's unclear as to what it is. I mean, so, okay, double bottom. All right, I got that. So you're kind of stuck here going, all right, well, I'm going to have to live with a 1, 2. Yeah, I know, right? I know it's ugly, but you got to call it something. So either you're going to call this the B, this is the B, and we're going to truncate the C because we don't get a new low here. Right, so if this is the 3 and the 4 is coming, right, we got to accommodate it somehow. Right, so either you got a wedge, call it ABC, and which is possible, but then looking at what comes, right? Maybe it's this. Maybe we're going to live with the 3 here. We might be forced to, because at this point, well, you can't really work on this. Looks like an impulse here. It looks like you can go 1, 2, 3. You got a shitty 4, right? So are you stuck with that, or is it 1, 2, 3, 4, 5? Well, if that was the 5. If you were putting the 1 here, well, you don't have a 3, right? If you're going, get 1, 2, 3, 4, 5, well, what do you got for a 2? I considered that, right? So that you might have 1. So you might do that. Now, let's get this one here. Well, no, pardon me. Let me relabel it here. You'd have to put this off. This will go off. I guess you kind of get my point here. Maybe. I don't like to trade maybes. Maybe, right? So if that's the case, well, then that would be very bullish. You're kind of stuck going, what? Jesus, it's just hideous, right? So maybe you have to do it this way. Pardon me. So we'd go. So then now you got to live with this as an ABC with a truncated C. So now you're talking about a running flat. Okay, 1, 2. Yeah, you could probably wedge the diagonal in there. So let's get this up a degree and see if we can make this work. It ain't pretty no matter how you slice it. So let's go to here, come here, let's go to green. All right, so if that's 1 and we got to go with the running flat, maybe. All right, it's not particularly, well, pardon me, we did get a couple of technical pivots here. So if the Elliott is that unclear, it doesn't mean that you go, well, shit, can't trade this. It means I got to look for, okay, what else can I work with? What can I work with? Well, I noticed this here. So this is shallow, so we only make a 38 here. But possibly this was used here off of the, you don't know. But you don't know until you see it. So if I come here and I use this secondary little pivot, okay, well, look what I get here. So from that, from this swing, I go internal, I go 50 to the tick. Now, there's the target. But you were kind of looking for it here. So it looks like a failure swing. So then you go here, and you go, okay, I'm going to stick with that same pivot. And get that right on that pivot. Well, now I get 50 to the tick again. So I got back-to-back 50s. Now if this is, again, it looks like you'd have to do it this way. So looks like you'd have to go 1, 2, 3, terrible 4 into a 5. So you'd have even that is shitty, right? You don't really want the expanding diagonal there. You want a contracting diagonal, but you're kind of stuck with it. Right? Again, so maybe, but I got a 50 here. I can work with that. What does that 50 do? It takes me right to target, to the tick. Right now I get my little reaction. So I can work with this, but I'm not leaning on the Elliott count because I don't know what the hell we've got here. Again, so one thought is, well, if it's until it clarifies, let's not even apply the Elliott. I mean, I know I've got a pivot here that I can work through as a candidate for the 4, but if I'm finishing up here in a 5, very unclear to me. Very, very unclear. But this, I can make sense of that. All right, so if it's 1, 2, if that's going to be the 2, well, let's just think about that projection. So let's use the lower pivot. If this is 1 and this is 2, well, can I get up that high? Well, then now we're back to that box that we had looked at. Well, how would that play in the context of this? Well, if this has got to get to this 100 just to get longer than this, so we'd have this fairly long. Oh, there's the S&P breaking its pivot. So if we're going 1, if that's the 2, and this is very shaky, I'm just working with what I've got there. So again, that looks like a 5. I can work that as a 3. I don't like the expanding here, but I'm kind of stuck with it. So if I'm going 1, 2, 3, okay, would I trade that? Well, so you've already tagged a pivot here, so I wouldn't be, well, again, as we're talking about it, I wouldn't be entering the market here on this breakout here, so it looks like I'm very vulnerable to a double top there. Oh, of course, that could keep going, but I've had no decent retracement here, and I'm on a 2-hour. So this is the, all right, and I've had to use this secondary pivot to get those retracements to play technically. So do I want to go 1, 2? Well, then 3 is not long enough, so I can't, because I considered that as well. Because you can see the 5 here, 1, 2, 3, 4. Well, you could do it this way: 1, 2, 3, 4. You have a tiny little 5, A, B, C. So you'd be thinking 1, 2, but then you're not longer yet. And you sure don't have much of an impulse here. So if this is 1, it's just, again, you're kind of bumping your head against the wall because it's so ugly from an Elliott perspective. It's not helping, it's actually hurting. Right? So I do know I have 2 technical pivots here, the last one being right here, that are perfect 50s that have hit target. So now I think my view would be I got to wait. I don't want to buy this breakout of this pivot, so I got to wait for something at least to give me that opportunity. So before you can even, well, again, my view, before I would consider longing this, well, I kind of look here and say, all right, well, it looks like some structure here that would be a reasonable spot. I got a big pit. Well, certainly, it's hard to miss that in the volume profile. So I know there's likely to be support there if it comes back and tests. So if I'm coming from this pivot, which is the last algo that I know was used, if I'm going to come, again, right, again, let's ignore the count. Maybe 2, maybe 2. It's until it clarifies. It's hurting, not helping. So let's put this right here. See how that lines up. So there's my, I'm in the context of the largest section here of my volume profile. So it's reasonable to anticipate there could be some support there. Now we do get, so point of control is below the 65. So you'd have to make a decision as to how much room you want to get that. I'd rather take it at the 618 because then I use the 786. Looking for that, so but you're going to need to get this just right. All right, so again, approach with caution here. That would see, if you did get that right, what would you have? Right, you'd have your nice golden corner here, which give you that. Right now, this could be here, in an hour. So let's not make any assumptions. But if it were to come down here, you'd have that setting there rather nicely for you. I'm just noticing the S&P just popped. All right, so we'll see what that does to gold. Right now, it just looks, this is a new high relative to this pivot here, but we've got, there's a lot. Oh, shit, I can't even get back there. All right, it's oh, Jesus. I can't even get there. Here's your key resistance up here. Right? So we got a ways to go. If we're going to break that, there's more headroom up here to go. But recognize this is going to be, there'll be significant resistance. There'll be a reaction there, likely. Let me say it that way. All right, guys, there you go. I would just be patient here and just wait for something technical to present itself to you for the opportunity. This is reasonable. This is not crazy amount of risk. So you'd be 1720 to 1705, so there's maybe $25 of risk there, and so trade the size accordingly, because you're in nosebleed region up here. You don't want to be overly just assuming we're just going to keep going. Wait for a decent retrace. Odds are you'll get it, and then you can enter where you're not buying the breakout. And if it starts to go up and then you're pushing towards that high, well, at least you know that you have an algo behind your back here. Even though you had an algo here, right? We just looked at that 50, it just hit first target. So you want to wait now and get a little retrace. Or do what you like, but I would suggest you wait for a 3. Now you can get long and participate in that with an algo at your back, right? It'll be there, right? It doesn't, of course, right? Doesn't mean this couldn't break and head lower, but at least when you enter the market at that time, right? Algo gets stopped out there too as well. All right, so there's a few ideas in terms of how you might approach that. So just alert it, and now you sit patiently. Don't FOMO it. Even if it goes, right? Even if it starts to run, don't just be careful about doing that, right? So you're here you're pushing 1824. Here's our high. So there's $1,000. I understand, right? So you say, hey, $1,000 to the all-time high, but again, what you going to buy the breakout? if you do it, right, let me, be curious, right? I'll be curious to see what your results are doing that. Okay, guys, there you go. I'll be back with one more. We'll circle back, see who got second place here. Okay, talk to you in a little bit.